Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Wednesday, June 28th. Today we're going to take a look at one we have taken a look at before. It is VALE, a mining company out of Brazil. Let's jump right in and take a look. If you want to know more about them, check them out. Vale.com. That's VALE.com. We were founded on June 1st, 1942 as Companhia Vale do Rio Doce. Over the years, we became just Vale and built a history. We pioneered the world as a global mining company. We are present in more than 20 countries, sharing the passion for our business. We face challenges and we continue to learn every day. We have advanced ever since the first ore extracted in Itabira, Minas Gerais. Since then, we started to work in logistics through our railroads, ports, and terminals in energy and in steel making. So steel making, ports and terminals, railroads, as well as a mining company in 20 countries. So they are more diversified than just a mining company, but this is a bit of a play on the EV line coming down the pike because the metals that we are going to need to make the batteries come from mining companies like Vale. And I believe, if I'm not mistaken, Vale actually has a deal with Elon Musk to provide some of the material for his batteries, nickel being one of those items. So again, Vale.com, that's their homepage. If you want to know more about them, check them out. A mining company here out of the material sector. Let's keep on rolling. Now, the reason we were taking a look at them, down 4.17% on the day. Big drop. We are talking about Vale, ticker VALE. Closed out the day at $13.33. 52-week range as low as $11.72, as high as $19.31. Average volume 22. Oh, there's a plane going by. Sorry about the noise. I'll just let that roll. Yeah, we get a lot of helicopters and a lot of planes. There is an Air Force base just north of me here, maybe 45 minutes or so. So they roll up and down the coast here behind us quite a bit. But let's keep on going. Sorry about the noise. Average volume 22.8. Today was 24.5. Big sell off throughout the day. Big drop in the morning, kind of flattened out, and then another drop in the afternoon. Market cap 58.266 billion. A beta of 0.82. They are less volatile than the overall market, but not by a lot. Price to earnings PE ratio on this one is $4.30. So for every $4.30, you're getting a dollar of their earnings, right? That's what that means. Earnings per share EPS for every $3.10. You're getting that they make, you're earning that. So that's very nice. So that's actually pretty high for a mining company, $3.10 EPS. Earnings date, there is not one listed currently. Forward dividend is 69 cents. Current yield 5.03. Now this one is going to be a little bit misleading. We'll see this here in a little bit whenever we look at how they pay these dividends out. They are a semi-annual, most of the time payer. I will say they're paying at least once a year. Most times they're paying semi-annual, but this fluctuates. This is not steady. So we'll see that, and we'll talk about that a little more here in a minute. Their payout ratio is low. It says 35, though. This is a little not jiving with what we'll see here in a minute. Very nice dividend. So let's finish here. Ex-dividend date March 14th. Looks like they paid out March 29th. That's about when I received my dividend. And a one-year target, at least according to Yahoo Finance, $16.98. So speaks to some upside potential appreciation for the stock price. Now let's go over into statistics, look at dividend yield theory, see if they're potentially undervalued. 5-year dividend average on this one, not available. So that is not necessarily good, but let's look at the trailing yield, 40.91. That is going to be a little misleading as well, but we'll just go with their forward dividend yield, 5.03%. So this is pretty high yielder and typically is a pretty high yielder, and we'll look at that a little bit more here. Payout ratio 35.20. So they have a lot of runway, but this all depends on the price of metals. That is one thing you want to watch for mining companies. They are very dependent on the price of metals. This one might not be as terrible with their ports and with their railroads. They might be a little more steady, but even then their bread and butter is still mining and the steel and metals that come with that. Free cash flow, we want growing free cash flow over time. 2019, 8.4 billion here. 2020, 9.8. Big jump up in 2021, and the metal prices jumped up as well. So that is part of the reason for that, from 9.8 to 20.6 billion. And big drop down from 2021 to 2022, from 20.6 to 6.0 billion, right? And then we'll just have to see what they do this year. Again, we haven't seen any earnings, and they haven't reported their earnings date. So this is one that I'll be watching, because if they continue to go down in free cash flow, it might be a bit concerning. They are repurchasing stocks, so that is good to see, especially whenever they are cheaper. So let's keep on rolling. Now, I always recommend more than one source to look at so that you can make sure the information you are getting is accurate. So another one that I like is stockanalysis.com. What we saw on the previous page was Yahoo Finance. I'm not affiliated with either site. And according to the 6 stock analysts here, they call it a consensus buy. They have a low estimate of $15. It is currently sitting at $13.33, so quite a bit lower than their lowest estimate. So if it came back up to their lowest estimate, that would be a 12.53% increase in the stock price. Average estimate of $17.58. That would be a 31.88% increase in the stock price, and a high estimate of $20, which would be a 50.04% increase in the stock price from where it currently sits. I like to look at this one, like I said, financials. You're going to see a lot of the same information, balance sheet, income statement. I like to look at statistics. That's where I get the return on equity, return on invested capital. Forecast is what we're looking at here, and dividends is what we'll look at in a minute. And return on equity and return on invested capital, I like 10% or better, and this smokes them both. 53.4% return on equity, 31.1% return on invested capital, and even the return on assets is very nice, 21.30. So very good numbers here overall. This company is really doing a great job reinvesting into whatever they're reinvesting in themselves, buying back shares, opening more mines. Their reinvested capital here is doing very well in the return on equity as well. So love to see numbers like that. I'd love all my companies to have numbers year over year over year like this. So very good here. That's part of the reason I bought VALE. Now here's where we're going to look at the dividends, and we'll talk a little bit about this. First, we'll look at, I am long VALE. I do have 200.314 shares. My cost basis is $13.82. I have $2,767.51 into the position. I am down 3.52%. Currently worth $2,670, down 116 bucks. Don't mind that. I hope this actually drops back to 11 and some change, and I will pick it up and continue to bring this cost basis down. I was buying this in the $12 marks well over a year ago, probably a couple years ago now, and I would love it to drop back into the $12, $11 where I started buying this, right? So I can, again, bring this cost basis down. Now, payout ratio here is showing 26%. We saw it in the 30s on the one before. Thing to note is it's low, right? Let's just say it's average these two out, it would be around 30%. So payout ratio around 30%. Dividend growth is negative. I don't really worry about that. Typically, I would worry about that, but I don't worry about it for this type of company because the way they pay out dividends is inconsistent and it paints a kind of funky picture. So as you can see, let's go back to 2017. 2017, they paid out April 2017, paid out 28 cents and some fractions of a penny. December 2017, they paid out 12 cents and some fractions of a penny. So twice in 2017, 2018, right? They paid out in April in 2017. In 18, they paid out in March, so not even the same month. And they paid out 15 cents and some fractions of a penny here there. August 2018, they paid out another 39 cents and some fractions of a penny, and December. So right on April to May, and then December, sometime in December, they typically pay out. You'll see that kind of continue here. But in 2018, instead of paying out twice, they paid out 3 times, right? So December, they paid out 34 cents and some fractions of a change. So see how these jump all around. 2020, September, they paid out 45 cents and some fractions of a penny. They only paid out once in 2020. And then 2021, they started paying out again. 2019, same things. Twice in 2017, twice in 2018, once in 2019, once in 2020. And then 2021, they went back and paid out quite a few times. March, they paid out 76 cents and some fractions of a penny. June 21, they paid out 43 cents. So again, dropped back down. But then in 2021, September, they paid out $1.55. So big jump up. Then in March of 2022, they paid out 72 cents. So there's that big drop, right? And you saw it drop again from March to August 2022 to 68 cents and fractions of a penny. And then December, they dropped it again to 5 cents and some fractions of a penny. But they paid out 3 times in 2021 and 2022. So far in 2023, they paid out just the once, 34 cents and some fractions of a penny. I am counting on one more payout sometime probably between June and December. That's kind of where I'm at. I would probably say closer to September or December, but I am expecting another payout, and hopefully it is higher than the 34 cents. But they do not pay out a consistent dividend, but they do pay out very nice dividend yield whenever they do pay out. Short of this one here in December 2022, which was really low for them. Everything's been 30 cents. Way back here in 2017, it was only 12 cents, but right around 30 cents or higher, especially recently. And they do throw out these, what I would consider, special dividends every now and again. I would call this, what they call it, a semi-annual, and count on 2 payments a year. And if you get that third, that's just a bonus. At least that's how I look at it. I think I rambled and talked through that one a little bit too much. Hopefully that made sense. But the key point here, they are inconsistent payer. I wouldn't count on them for more than 2 payments, and count on them being different, probably based on, not probably, but based on what metal prices are doing, right? And how the economy is doing overall. This is vested interest stock screener. If you want to go through this at your leisure, go ahead. We're getting a little winded on this one, a little long in the time. And really, that is it. Let me know what you think in the comments down below. What do you think of VALE? Do you like other mining companies better? I do have another one in my portfolio. I used to have a couple. Rio was one. I used to have, I can't. Kinross Gold Company was another one. SBSW is another one that I have in mind. So let me know if you have any of those or any others in your portfolio. Always interested to read. Always appreciate you stopping by. If you haven't done it already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a like-minded dividend growth investing community so that we can share stocks like this, share our experiences overall, stocks in our portfolio, stocks that are doing well, stocks that are doing poorly, and just communicate about dividend growth investing overall. That is what it's all about. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock like this you want me to cover in the Stock Pick of the Day series, drop it down below and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, and money should never invest any amount not conclusion. Always do your own research, invest based on your situation, circumstances, select criteria, or seek advice counsel, a certified financial advisor.